Okay, so today I'm going to be going over the trade I took on Monday. So, to start off, um, the replay trading is acting up. It won't let me go on the 1 minute, so I'm not going to use that today. So, to start off, we have market open right here, and normally I would consider the London high a key level, but we opened like right next to it and then we took it out, so I wasn't going to really take that. So instead we have this key level marked by this green line from back here. So we ended up sweeping that out and we end up forming a fair value gap right here. And we inverse that off this candle. This candle is the one that officially inversed the gap. And so now, so that was step 2. So 1 and 2 already complete. Now we use equilibrium to find when price enters a premium. And equilibrium is basically, it's sort of like a fair value gap retracement, because it just measures when price goes up, except we don't actually have, oh wait a minute. I was going to say it's like a fair value gap retracement. Yeah, no. Okay, so we couldn't have used the fair value gap because it wouldn't have come in. So that's why we used equilibrium instead, because like I said, we saw that price went into a premium. So that was our third confluence. And from here, we would scale down. And I think it should work. Where did we go? Okay, here we are. So yeah, now we scale down. We are like right here. And we end up forming another fair value gap, which gets inversed off of this big candle right here. And so this is actually our entry. So that was our final step before we enter. Not before we enter, because it was literally the entry. So we enter off this candle right here, and price ends up scarily moving towards the stop loss right here, but ends up coming back down and targeting this prominent low. So the reason I had this low marked out was because it stands out. Let's see if I can mark it. Okay, so yeah. So trimmed here, trimmed again right here, and then full TP right here. I'm trying to set up where I can like leave runners, because like ideally I would want to move my stop loss like to something like, I don't know, somewhere in here in this range, like once I hit this level, and then, or not once I hit this level, once I hit final TP, and then I can still have like one contract left, just like running to see like what price does, like just in case it wanted lower. Like in this case, it did end up going a bit lower, so that would have been some extra bread. But yeah, that's basically the trade recap for Monday. What the hell happened here? Reason for the stop loss was we were above the equilibrium high, or not the high, but like we were above where price entered the premium, so I didn't see price really coming back up there, but we kind of did, just didn't really go past it. So yeah, pretty clean trade. I'm still a little bit confused about equilibrium sometimes, so I'm gonna have to go back and rewatch some videos on that and then practice it. But yeah, that's all for now. guess while I'm here, I'll just do a recap on today's trade, Tuesday's trade. Let's see, there it is. Okay, that's squared off right there. Alright, so today's trade, we actually lost. It was around like $500 lost, I think. So market opens actually way back here, but like I woke up late today, so I forgot when I woke up. I think I woke up and we are like in the middle right here. We were like making this downtrend, so I was like, what the hell, because we haven't taken out any lulls, like, so I thought I didn't miss anything, right? So we come up and we end up taking out this this London high, and that was my first mistake. And I actually took this trade on ES, just because the price action was cleaner than NQ at the time. But yeah, I should have waited a little bit more. In fact, I shouldn't have even traded today, but I did anyways, because I thought that this was going to be step one. So step one was right here, hitting this key level. And then step two, look for like an inverse fair value gap, or like that's actually what we did. Why do I have this marked? Oh, yeah, this is the fair value gap we ended up inversing. So yeah, come down, inverse this, and then on to step three. So now we need like a continuation. So I think I used equilibrium again. We saw that these two candles right here ended up moving into a premium, which is like the top half of this equilibrium. And from here, I'm gonna mark this out so I don't lose this spot, but from here I ended up scaling down to the 1 minute. 1 minute, all right, so it's right here. So then we ended up making this fair value gap on the way up during that equilibrium retracement, and now we can come down and inverse this, and this is where I entered. So it was going kind of good, and then we went through, and I actually had my stop tighter than this. Did I? Honestly, that was just a really dumb mistake. That's like a 12-point stop. Like, that's stupidly tight, especially for the market these days. Not only that, but we also had this other prominent high from way back here that price is probably going to take out and then reverse off of later today. But we already lost one trade, so we're going to be off for the day. So yeah, first loss with this strategy, and it was for some pretty stupid reasons, you know, not even a fucking yeah. So what we could have done better is we could have had a tighter stop loss, not tighter, looser. I mean, this is like way too tight. And we also could have waited for these levels to get taken out. But then again, this is already pretty late in the day. Like, price action typically slows down, like as you can see, like right now. I also should have woken up earlier. But yeah, just is what it is. Gonna have to take the loss today. Wasn't a crazy loss. Like, it wouldn't, like, I'm not negative. in total. Like the previous wins I had, this loss was like really little. It was only around like $500 because I did actually take it on the right contract size, and yeah. So I think I'm just gonna trade these ones, ES and NQ, which is like the micro contract. And the reason I'm gonna do that is the level sweeps, the way price reacts to liquidity is a lot cleaner. Like sometimes on the contract, it won't sweep a level. Um, I can't find an example right now, but actually maybe I will. I don't know. Okay, let's go to yesterday's trade and see it. Is this yesterday's trade? Where was yesterday's trade? This was yesterday's trade. Okay, so remember how we had a pretty high high that we used as a key level to sweep? Is this it right here? Oh, okay, so it's pretty similar. Where did it go? Bro, that is. You guys get to watch me zoom around on the charts. Damn, what the heck? I'll have to go back and watch this recording. Um. Okay, yeah. So went on Monday, lost on Tuesday. And I'm gonna go journal this stuff. All right, peace.